to the rationalinvestor.com's daily brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the rationalinvestor.com's daily brief. Happy Monday morning. Hey, Ed. Ed's in the call with us here. Right on, Ed. Ed, I tell you, the only good trade I did this morning was the riding Ed's coattail trade. he's a fucking boss. So there you go. Start the video with a big F-bomb. But I tell you, he's a boss, futures trader. God, it's fun working with Ed. Anyway, start off the video with a big shout out. Ed is the man. Way to go there, Slick. And a polite message to Just Ice: quit talking so goddamn much. You'd have to be in the day trader room to understand that joke this morning. What can we tell you? It's obviously TGIM. Happy Monday morning, the 8th of April, marching through the spring month. Anything, hopefully the days will be getting longer. In northern hemisphere, weather will be getting better. I don't know whether March break and all those kind of holidays are all done now. Kids may be back for their final school term. And we've got the, the second quarter kicking off in earnest. And actually, it was interesting. We very briefly, but I'll probably talk more about this in the coming sessions. We very briefly touched on the sector rotation first 2 weeks. In fact, our level 3 education program will be doing sector rotation and sector modeling this coming week. So if anything, all you level 3ers better be getting up to speed with all this. Did find it interesting. I suppose it really shouldn't surprise anybody, but oil and energy are just absolutely kicking it right now. And as a result, that actually gives us a pretty good idea of where we are in the economic cycle. And fund managers have a habit of putting money to work the very beginning of each quarter when they get sort of released money by all their pension contributors, teachers' pension funds, those kind of thing. And you can clearly see the three outperformers even outperforming communication services. You remember yesterday we were looking at this, and the communication service is still relatively strong, but you can see industrials, materials, and more importantly, energy. The black gold, I suppose, also natural gas is in there somewhere. The big conversation today, and I thought it was interesting with this backdrop. Maybe written a little on this or something for social media. He was telling me that a lot of people in the public today are talking about an individual pipeline company, Plains All American Pipelines. And, you know, it makes sense why the public is talking about this here, but you have to understand, as a professional trader, there is no way in hell you could come in and buy that there. That's ridiculous. You're kind of asking for trouble. Having said that, the numbers, 35% owned by insiders. That's always good. 700 million shares out. No way that's a cheap stock. And you know, Brian, he's a cheap ass. So I really don't like buying stocks with that many shares out. Carrying a bit of debt, but it is a pipeline company. So this is sort of like borderline utility stock. And of course, if they're in the energy business, energy seems to be doing relatively well. So that really shouldn't surprise us. Relatively low PE, and they're going to pay a half decent chunk of money here. You can see, not quite sure what the difference between these two dividend yields are. I guess this is a dividend estimate. That's kind of odd. And I guess that's last quarter's dividend. I suppose what's probably happened here is enough companies, and keep in mind, publicly traded companies can come along and either slash or raise their dividend at any time. And this is always the danger of owning publicly traded companies and depending on things like dividend for income. If the industry goes belly up, and if you're in a commodities business and the commodity tanks, the companies, the very first thing they do is they slash the dividend. Probably a good rule of thumb, and maybe a little bit of learning material for the public. Usually, what we like to see in the industry is that the dividend itself is covered 2 or 3 times by earnings itself. So then you don't have to worry about them cutting the dividend. You see that the dividend itself, $1.30, and earnings per share here coming in basically $1.40. That's not so good. You would prefer that the earnings overwhelm the dividend. Having said that, this is a utility, pipeline kind of company, quasi utility. So it doesn't surprise me they flow through most of their earnings straight to shareholders. Anyway, nothing really for me to get too excited about here, and there's no way I could buy a stock that looks like this. I mean, that would be like coming in and buying here, and then, oh, you have to see this, and you get awfully embarrassed, or coming in and buying here, and the market pulls back. So you can see in these kind of situations, you just draw your reload zones, try and buy against the bottom ends of ranges, and you just wait for the pullback, and then you pull the trigger. So I might even suggest that that's a dollar high. Reload zones are probably. I do find it interesting, though, that of course materials, energy, industrials are sort of the outperformers here. And you heard me ranting yesterday. I can't see how the Fed can possibly lower interest rates in the face of this. This is not the part of the economic cycle where you lower interest rates. We got a bull market happening in stocks, and of course, you look at the stock market itself, very, very difficult to justify thinking tops here just yet. And certainly nowhere near thinking about, oh, the market's crashing, the Fed's got to come and save the market. Now, having said that, that's not a very pretty technical picture. This to me looks like a very dangerous market, but you can't talk about the Fed cutting rates until this thing actually breaks. You could make an argument on the weekly basis. We do have bearish momentum divergence through this big face rip move up. Interestingly enough, the market did pivot, and I think this is probably the most important thing for today, is the market did pivot. You can clearly see it on the weekly charts. Did anything celestially happen right here? This was the eclipse last fall. So, if anything, one good part about technical analysis you can actually go back and go, holy crap, maybe those eclipses are kind of important. Anyway, big boom up here. Interestingly, if you're a fan of W.D. Gann, he basically says, just think of it like a quarterly basis, on the calendar, March, June, September, December kind of thing. Well, you can think about this kind of the same way. So not a big surprise that the midpoint of this move came in right at the end of the year, beginning of January, which is, sort of the end of October, beginning of November, end of January, middle of January, let's call it. That's basically one quarter. And lo and behold, here we are at another eclipse. Dun, dun, dun. And I might make the argument that technically this market looks extremely dangerous on the weekly charts. Huge signal from Willie, RSI's even flashing overbought. And you can see how the MACD histogram has actually been trending lower here now since that January pivot, i.e., this move that we've seen since January, I think is actually just all fluff and it's all nonsense. If we look at the daily charts, wow, look at that double top there in MACD. So overt signs of momentum divergence. Willie, of course, ridiculously stupid, embedded stupid. Hell, we even got an RSI divergence here as well. And, you can see how enthusiastic the buyers were on this candle here, pushing the market up. But where have the buyers gone? And if anything, this last candle, this up candle here we had last week, it was good volume, but it wasn't breakout volume. So you could actually make the argument there is a potential volume impetus signal coming in. And I've always told students that, OBV is by far the best indicator to follow, especially for things like divergence. If you ever see an OBV div, that's almost a lock. And you can see OBV is looking a little tired up here. We do actually have an M working, right? That was on this big selling volume bar here. It hasn't broken through the moving average here. And my hunch is we need the buyers just to quietly back away. But if that rolls over negatively, then I think we actually have a new trend established here. So considering it's the eclipse, you see how the market pivoted on the eclipse last fall. And considering the very, very overbought condition of this market and the divergence that is basically in place. In fact, I'm surprised. Let's see what our weekly volume looks like. Yeah, you can kind of see, look how the buyers are just backing away, backing away, backing away. So we're right on a knife's edge here, folks. And of course, like I said, this eclipse, I've been waiting for it. I do believe it's a pivot. I don't know whether it's a pivot to a bear market, but what's bizarre is that the Fed has been continually barking about them wanting to lower interest rates sometime later in the year. Well, the only way that you cannot justify lowering interest rates if the stock market's at new highs. That's ridiculous. But maybe they see something. Maybe they have a crystal ball. Doubtful. But maybe they have some sort of crystal ball that's telling them that all hell's about to break loose in the market. What I would say is if we just simply connect the dots on this weekly chart, there's trendline support. And that trendline support is actually justified by market structure. So we could very easily see a fairly healthy pullback here in Stockland, folks. Don't be shocked if over the next few months you hear Brian talking about corrections. And of course, what are we supposed to think through Brian's birthday? And that's basically about a month away. So seasonally, everything's shaping up for a correction. I just don't know how they justify talking about lowering interest rates, especially in the face of the bond market. We actually had a really great conversation yesterday about this bond market. I don't think the Fed will act until the market tells it to act. We used to use the Eurodollar market to tell us, but then they got rid of the Eurodollar market. So we're using the 2-year US Treasury bond market. And when this thing ticks up, you can see how as this 2-year bond was ticking up, people were starting to feel a little bit more comfortable about, okay, maybe the Fed's done raising interest rates, and you can see this thing's starting to move up a little bit. Then we head and shoulders top. Then we're starting to make lower highs and lower lows. A new M came in. I don't think you can even think about the Fed lowering interest rates until this thing actually turns in earnest and you see a big fat weekly W here. So I wouldn't be in a big hurry, especially with the way that two-year note looks. And sort of looking at today, it's Monday. We're right out of the gate. I don't think we want to read too much into price action. I was even in the day trader room just fucking around because I even noticed with the eclipse, I thought I had set myself up for success, but when I woke up this morning, I was incredibly scatterbrained, and I even journaled that I just wasn't seeing the market clearly. And frankly, I wasn't actually seeing any setups actually coming in. And what's interesting is that I did like the idea of the market topping out here today on a day trader basis kind of idea. And I did take some shots on the short side, paper trading. Certainly didn't want to risk real capital on a Monday. Not really seeing clear setups in like this NASDAQ short. I didn't mind the idea of coming in and trying to hit that top, but because it's Monday and because there's no econs today and there's this crazy eclipse, it really didn't surprise me that they ran it off. And then they broke the market down. And what's fascinating is they actually did this. This trade was actually absolutely textbook. The other side of it, I was shorting here, got stopped out. I took another short shot here, got stopped out. So clearly it wasn't seeing the market, really wasn't even really any great setups here. But Ed, in all of his wisdom and guile, I suppose, he's so freaking awesome. He came in here, and if anything, this was the trade. It was actually a very pretty trade. Where is it? Here it is. coming in right on the euro close. This actually made a lot of sense. Thanks, Chris. Where there is your euro close. The market, there was the first short attempt on the Nasdaq. Then there was the second short attempt. Then finally, this thing started to roll over. Ed's like, okay, I got lots of signals that this thing's rolling over. So I just joined him on this trade, and we were able to take some of the market's money and offset the kind of bad trading day I had. It was Monday. It was all paper trades. I didn't really want to risk any real money, and I wasn't seeing the market clearly. The only profit I made was riding somebody else's coattails. So that was my Monday, and if anything, a pretty typical Monday, to be honest with you. Quite often I wake up on Mondays and I'm like, you know what? Today's not a good day to go and blow your account up. We'll finish off with a quick boo at the corn. Corn actually went ripping up last night and blew out the stops on the move stop to scratch position on this short off of this top, and kind of the same thing as the stock market. A lot of liquidity hunting, no news, and of course we got this crazy eclipse. So I think that's really all they did here. I mean, I had this short working off of this. We took a little bit of profits. There was the trade there. Took a little bit of profits here, moved stop to scratch, and they came in and stopped me out at scratch. Yeah, big deal. Next bus in 10 minutes. If this thing goes and M's out here again, I might just hit it again. And interestingly enough, I was kind of thinking that maybe yesterday in the video when I was talking to you guys, that they might actually ramp this thing up dramatically. That's not the chart I wanted to show you. Where's the chart I wanted to show you? This one. Were they going to ramp this thing up and actually tag that trend line from the underside and the 1.618? And really all they could muster here so far, I mean, the day's young, who knows, was just a run of these highs. And then we sort of stalled out here, which ironically enough, if we just go sideways here now that they've wiped this out, then really all that is just this. So I don't know. It'll be interesting to see how this day progresses. As it stands right now, I have no position right here. I'm not really aggressive. The one market I did want to be firm here today is weak. How typical. But, looking at the broader crypto portfolio, quite a bit of green on the screen here this morning. So there's the only one that's down. I wanted to sell at 20 cents. Of course, they screwed me and cold storage wallets and trying to do these trades on DeFi. That just didn't make sense. So I've left that for the time being. But on balance, it looks like crypto is relatively happy here today. So certainly no sell signals here today. We'll just watch how this plays out. And if anything, our job, and, I kind of pointed out, setups like SHIB here. I suppose Doge also looks very similar. We now need to see how the market actually behaves on the other side of this eclipse. And, I wouldn't fault you if you were kind of like, okay, the eclipse is out of the way. It's a relatively quiet news day. The next big event for crypto is about a dozen days away here from me now. I think I'll take a long shot on a name like this. We're on the other side of these trend lines. We're Wing out. We're going to try and front run the bot. And of course, the indicators are all trying to point back up here. So, a trader's got to trade. And you can go through a lot of these names. There are a lot of setups coming in. So as I tweeted out, basically saying, I don't know whether I really want to get into the business of predicting what's going to happen here ahead of this halving event. I get the impression that Bitcoin, if it follows 2016, 15 kind of price action, it might just be parked here for the next while. But, get out there and hunt setups. I thought it was interesting in SOL land. Where is my funny Solana little setup here? A lot of these names are actually starting to come back down into buying windows. And so I think I had showed you yesterday, and this was speaking to a gentleman in the Q&A document, the AMA document. It asked, how long do you work at open orders? Here's a good example where I wanted to get filled. The market exploded higher and I was selling up top. And I was just like, okay, I'm willing to step right back in and buy against these lows. And I was working my bid and I had to just sit there and do nothing because I wanted to get filled right off of the lows, right down in this level down in here. And sure enough, there I got my fill this morning on this guy. So there's a good example of just working open orders, stink bids, if you want to call them that. And I got a fill. So I'm back in on this the bros. And like one that I've been quite interested in here because it put in a very interesting RSI pattern kind of talk. I really like the look of this one. We'll see what happens. I mean, maybe I won't like the look of it when it loads up here, but on balance, starting to see trades actually start to develop. This little guy here, interesting to see the volume is actually rocking and rolling. Yeah, we'd like to see volume keep ramping. We'd like to see higher highs. This high here was 16,619, and this high here today, 16,643. So that's encouraging. Higher highs and higher lows defines a bull market. So we'll see how that goes. And, there's a bunch of these kind of names that look like this. And like I showed you in the bigger names, a bit of green on the screen. So I think probably what I'm going to be doing is, well, in the after party, we might even go through some other names, see what they look like, maybe answer any questions that might be left over lingering from site members. But I think on balance, I'm probably going to be cooling my jets for the most of the day here, and just simply, seeing how this eclipse plays itself out. You can see the stock markets are up and down and up and down and up and down. There really isn't even any news of significance. I think inflation numbers come out on Wednesday. So I suppose the only up stock right now, ironically enough, on this board, and NASDAQ probably would be negative if it wasn't the fact, is that silly Allen guy's stock, although I don't even know how much he's actually in the story anymore. And I noticed, I just wanted to take a quick boo before I leave you guys in the public. This is sort of my matrix of the sort of market darlings of late. Don't really see anything dramatic, although I do see that these semiconductors, especially the old blue chip Intel, not really blue chip anymore, it's looking pretty darn heavy. So he's looking a little troublesome. Is NVIDIA actually going to confirm this outside downside key reversal? You can see we're threatening to break down here. If you see NVIDIA below, what is that number? 858.80. Be careful, sports fans. Next earnings report for this guy isn't till, oh geez, after my birthday. Could we have a nice little, and keep in mind that is an M top, so if we actually trade down through these lows, and it's also actually, it looks like it's a pretty good looking harmonic too. So that means, if we do start going down through here, you can see where Foggenbaums are. You can see the size of the gap here. So maybe the old Fedsters, they see something coming. I think probably the tell is going to be follow the bond market. And if these bonds actually start Wing out and suggesting that the economic pressure is abating, then I think we're okay. And then you might actually start seeing the Fed actually talking about interest rates. I don't see anything like that at all. And if anything, it's probably going to get worse before it gets better. But you can even see on the long end, that looks very emmy. So I have a feeling, and unfortunately, energy prices are so strong right now that it's awfully tough to make the argument that there isn't a lot of inflationary pressure in this economy. And of course, we've been talking about it, any site members, any school members, those kind of things. Everybody can pull up their inflation deflation gauge, which I think is much, much better than listening to any talking heads. And really, you want to know that the inflation pressure is abating. We got to start seeing some M's here and actually seeing some technical breakdown here. And I don't see that anywhere. So. All right, there's your report for Monday. Hope you enjoyed that. PMA for the win. Slow and steady wins the race. Let's head on over to the after party. Have a nice little chit chat with site members, and hopefully give you some constructive information that will help you in your trading day. Have yourselves a great day. PMA for the win. All the best. Don't take no wooden nickels, as that Ed guy would say. All the best. Bye for now.